Hello and welcome to episode 40 of the BizNews Briefing from the team at biznews.com. I'm Lucy Ferreira and today is Monday the 22nd of August. Starting us off on the show today, we'll have the market report, and followed by that we'll be joined by our colleagues Stuart, Lowman and Nadya, Swart to chat about the biggest stories on the site today, including independence for the Western Cape, the fallout of the serotonin hypothesis on depression, and from our partners, the FT in London, we'll look at Apple's challenges in getting employees to return to the office. But before we get to those stories, Alec, what's been happening in the markets today?
Oh, thank you, Lucy, and nice to see Stu and Nadya. In fact, you spoke about the Western Cape. Are you guys getting excited? Do you think that the Western Cape ever could get independence, Nadya?
I struggle to see it actually happen. And I'm also conflicted as to whether I would like it to happen. I feel almost un-South African and unpatriotic to want it to happen. But after listening to Charlie Robertson's interview, I really can see the virtue in it happening. So it's a bit of a conflicted topic for me.
Yeah, that interview, Charlie Robertson, which is coming up a little later, you set it up, Lucy. He's quite a guy, isn't he?
I did indeed. He certainly is the consummate nutty professor, and it was all about his book, The Time Travelling Economist. And Alec, I think the insights that you gleaned from that were significant, but especially in terms of the benefits for the Western Cape seceding. Can we use that word? Things work there, and I suppose that's where a lot of the arguments for the pro separation come from.
Yeah, I asked, we don't have to ask our colleague Stuart Lowman, who moved to the Western Cape. Hey, Stu, you keep telling us, those of us up here in Joburg are nuts.
I think it's a governance thing, Alec. You only see it when you step out of it and then you step back into it. And as you know, I'm up once a month and you can actually see the variation in how things are managed. And it's quite eye-opening, unfortunately, but it is what it is. But yeah, I can see it happening, but I don't think it'll be an easy path, as Charlie says in his interview, going forward.
I actually tried to get him to disavow that. So the question was, the guys in the Western Cape are saying this. Everything that you've told us, can you contradict them? And he said, no.
And he actually said, unfortunately, as if he had wanted to or would have wanted to think, that that's not the way to go.
Yeah.
So I think that's quite telling as well.
Got a little clip on that, but before I get there, unless I want to get into trouble with Lucy, let me just take you through the major markets. Today, not a good day on the JSE. Industrials down 1.33%. The top 40 down by about 0.75%. The resources did a little better, about 0.5%, and financials down by 0.33%. The rand is pretty much where it finished on Friday. We're at 17 rand and 1 cent against the US dollar. That's like 2 cents difference. Against the pound, we're 5 cents stronger at 20 rand and 3 cents, and the euro about 8 cents weaker at 16 rand and 93. Big story of the day, though, was Brent crude. That's down by nearly 4% today, $93.15 a barrel. That's good news. If the rand can just hold where it is, Brent crude can keep falling. That'll be good news for motorists. Some of the big movers on the JSE, Exaro up 4.5%, Spar and clicks to retailers, both about 2% stronger. Telkom, 2.5%. That was after a trading update today came out from both, not a trading update, a SENS report came from both Telkom and MTN to say that they're continuing to talk. So Telkom up 2.5% and MTN down by about 0.5%. Richemont has been under pressure. That was down 3%. And then Standard Bank, we spoke with Sim Shabalala on Friday. That share price down 2% today. On the way up, Motors had a trading update. It said that its profits for the year to end June is going to be 70% higher, and that share price then up 3% today. It's an interesting one because it trades at under 6 times its earnings. Now, if you know anything about investment analysis and you think that you want to get your money back in 6 years minimum, that's pretty cheap for a company. I guess some people thinking that it can't sustain this kind of profit run. And then Sun International brought its trading statement out for the 6 months to June, and it too went up today by 3%. This after It's turning around from a loss of 32 cents, which is not surprising. Anybody who knows the hotel sector will know that it's been a pretty tough time last year during COVID. A loss of 32 cents a share headline, and they're taking that to a profit of 90 cents a share. Stu, before we get to you, I also did talk to Charles Savage today, and you might recall that his company, Purple Capital, or Purple Group, I think, they are one of the stocks in the BizNews portfolio. It went up 10% on Friday after Ascend's announcement that said they've done a deal in the Far East. And here is what... What are you laughing about? Did I nearly let the cat out the bag? Okay. Well, he never told me where they did a deal. It said it was somewhere in Asia. And here's what he had to say. Now, you know this company very well, colleagues. Let's just hear what Charles had to say on the increase in the share price.
Look, I think any news in this market is an opportunity for some good news. I think there's so much bad news around us that I think a little bit of good news is enough to support a share price. I mean, I don't think that the news is priced in to the share price, frankly. I mean, I just think that when we announce who this partner is and the scale and aptitude that they have to help us scale this business, I think there's a lot more that will come from it. But let's be considerate of the fact that we're in a kind of recessionary environment. Globally, growth stocks are under a lot of pressure. We've come under our own pressure in terms of our share price. And so, for us, it doesn't really matter what the share price is today. It's what can this do for the share price over the next 3, 5, and 10 years. And that's the really exciting part.
Do you think that's good news, Stu, for the BizNews portfolio, given that we've got an update tomorrow?
I do, Alec. I know easy equity is all about partnerships. If you look locally, Capitec, Discovery's coming up, different market segments, obviously branching out to the UK, US, and now potentially East Side. So I think it's fantastic growth opportunities, and for shareholders. I know Charles is also at the conference next week, so maybe we'll get some more insight there.
The last time he was at the conference, Nadya, was about a year ago, I think, and he...
it was a year and a half, yeah.
Yeah, a year and a half ago. You recall one of the conference delegates ran out and bought 50,000 rands worth of shares after listening to Charles?
Another conference delegate came to me immediately afterwards and said, when can we see this footage? Because this is what I want to show my children. This is the kind of lessons they need to learn. So it just goes to show, there's a lot of value in what Charles Savage speaks.
Yeah, he does. And especially this financial education. It's fantastic what easy equities have done. 1.5 million people. And I guess to a large degree, that also, Lucy, is why we are trying to shape our product more to the South African market, because there's hunger for information on South African stocks.
Indeed, Alec, I think it is agreed that there is a dearth of information across the board, not only just in terms of financial literacy and education, but also getting access to good insight, good analysis, where are the trends going, and what is actually happening on the JSE. So we're trying to bring to our audience in-depth insights, but also views from industry leaders, such as Charles Savage.
And you are trying to make me work harder.
That is indeed true, Alec.
Who have you got lined up? Come on, tell us of some of the nice interviews that I have to prepare for.
Tomorrow we've got Fleetwood Grobler following Sasol's release of results, so we're quite excited about that one. We've got Absa's Ari Rautenbach. He'll be coming in to studio with us, which I think is also quite good. We're expecting to speak with Exaro's new CEO. We're lining up all of the big names coming from JSE results, and that's going to lead us to even more conversations, Alec. And I think it's important that our audience also lets us know, who do they want to be hearing from.
Stu, what's going on in the network today?
Just on .com, you spoke about the oil price. My colleague Ross Sinclair put together a piece off the My Broadband website on hybrid cars, and they looked at the petrol savings on the hybrid versus the fully petroled cars. And the average is about 2 to 5 litres of 100 kilometers. So it's quite interesting. There was already a 400-500 rand savings on a trip to Durban, whatever. I think with this, who knows, with the oil price coming down, maybe bigger savings for everyone. There's another piece from Herman Pretorius, from the Institute of Race Relations, on the ANC and how a lot of the rhetoric has been to, seeing the ANC on a downward trend, etc. He just says, beware. The coalition of wild dogs will struggle to take down the horned buffalo, as my colleague Sandra put in the headline. And then another interesting piece, we do like to do community speaks pieces on the .com. My colleague Courtney van der Walt put together a piece off the back of your Sean Pesh firecracker interview last week, and basically pointing to the community. That's all the community input off the back of that interview. And how people should actually just do their own investing in future to avoid such high fees that they're faced with some of the big three. You mentioned your Charles Savage interview. That's on BizNews Radio. Very insightful listen there. And then your Charlie Roberts interview is on BizNews TV, which is on the YouTube channel.
Thanks, Stu. Well, let's get that clip now from Charlie Robertson. He is the chief economist at Renaissance Capital, which is the world's biggest investor in focused investor on emerging markets. And it's a really, really good interview. I know I say this quite often. It's like, somebody who likes their own cooking, but I really enjoyed this chat with him. He effectively, what he says is that, and it really makes a lot of sense, if you were to put a different literacy ratio, electricity power consumption, and population growth rate in a different part of the world, you'll have a outcome on economic growth, which is quite predictable. In other words, if you have highly literate people with lots of electricity and low population growth rate, they'll save more and the economy will grow more. If you have the opposite, you get some of the situations that we're seeing in Africa, and in fact in parts of South Africa. So I said to him, but surely all of this is going to be picked up by those who want to secede from South Africa, where there's so many imbalances in different parts of the country. And here's what he had to say. I can hear the lobby that wants to have independence in the Western Cape saying, get hold of Charlie Robertson's book, because this shows you we are very different to other parts of South Africa. Would you counter that argument?
Unfortunately, I wouldn't. And I talk about it in Nigeria, where there's even more pronounced difference, where the adult literacy rate for women in parts of northern Nigeria is as low as 8% in 2015. While in Lagos, it's probably closer to 70 to 80%. So Lagos has got a very literate population, but Nigeria on average doesn't. Lagos has got at least 10, possibly 20 million people, could be a quarter of Nigeria's GDP. That's not a surprise, because that's where all the literate people are, most of them. And they've got a lower fertility rate. There's less children in Lagos than any other state in Nigeria. So Lagos is an independent city-state. The governor of Lagos claims it to be something like top 10. I think it's more like top 10, top 15 economy in Africa. You can see the case for a part of the country that's so different, so much more advanced, decades ahead of other parts. Why get held back by northern Nigeria when southern Nigeria could go do so much better in leaps and bounds? So, and there's a case, we see it in Italy. Northern Italy had much higher literacy rates in the 19th century than southern Italy. In fact, southern Italy, in some parts of southern Italy, didn't get over 50% adult literacy until about 1950, after World War II. And you still see today southern Italy requiring fiscal transfers from northern Italy. So I can see the case for why people there's more support for that Western Cape debate. It's just the difficulty, and we've seen it around the world, is countries splitting up is a very complicated and often conflictual situation, and that would obviously be a disaster.
Yeah, and that's the big thing. It's all very well for the people of the Western Cape to say, we don't want to be part of South Africa because we're going to be subsidizing you for many years into the future. But will the rest of South Africa allow it? I guess that's the big question, Nadya. So not only is it an emotional thing, but economics sometimes make a lot of sense. But in developing countries, politics trumps economics.
Oh no, it's likely to become a very contentious issue the closer we come to it being a reality.
And just the practicalities around it. I mean, if it's a bit like California, separating itself from the rest of the USA. If you think about what that adds to the GDP and tax, and how you've got people flooding to the state because of their policies, practically, could that even play out? And perhaps it's a utopian ideal that we're talking about.
I asked Charlie about that and whether he felt that there would be more pressure on fractioning of countries. And he said he's surprised there hasn't been more of it happening, because in economics, it makes all the sense in the world. And perhaps now, as people get more informed, the hope is that good governance will replace bad governance, because people know better and then would not want to lose the jewels in the crown. Nadya, you've done a piece that I thoroughly enjoyed on serotonin. Does serotonin treat depression?
It's important to give context to the story. The chemical imbalance depression hypothesis that we have been relying on, that drug makers, very importantly, have been relying on to fill their pockets, it's been their bread and butter since the 1960s, is that depression is linked to low serotonin, but also caused by this chemical imbalance. And in July, a UCL group of scientists led by Dr. Joanna Moncrief, who I interviewed a few weeks ago, did a review of all the analyses on this subject matter, finding no evidence of any link. So it completely capsizes a theory that the pharmaceutical industry has been relying on for 70 years. But the interesting thing is that the patents on most of these antidepressants have run out. So that would be most people's arguments, that they don't really have a prolonged interest on it anymore. But what came out in the article that I worked on today, that was originally published on Children's Health Defense, the Defender website, was that 70% of the authors who expand the increasing list of mental disorders in the Diagnostic Statistical Manual are funded by drug makers. And this, to me, it hit me in the face. I could not read something like that without being just simultaneously disturbed and just unsettled, if anyone can read it and not feel that way. So the pushback from this study's findings have really been from psychiatric unions, because to a very great extent, psychiatrists and doctors also find great comfort in being able to prescribe something to treat something as apparently up until today is still misunderstood as depression, and drug makers. So it's a developing story, but Dr. Moncrief was an incredible person to interview. Very concise. Did not pretend to know anything that she was not sure of. So it's going to be interesting to see how this thing plays out. But it's the gravitas of the story, I think, is can't be underestimated at this point.
Sure, vested interests. If you want to know more about vested interests, Lucy, we had a chat today with Sean Pesh. Yes, he called the interview last week a Scud missile compared with a nuclear explosion for the one that he's focused his attention on now. Where are we on the publication of that? When's that going to be coming through?
So, Alec, we're furiously working on that, and I think just for context, that's following Sean's scathing review of balanced funds and the performance that investors see from balanced funds. And he's taken it a step further, as you say. That should be up on the site ASAP. We're hoping a little bit later tonight, and if not, first thing tomorrow morning. As we usually do, we will put links in the show notes, both to everything that we've chatted about today, but to Sean's interview as well. I think it's going to create quite a ruckus.
Well, our last story that we're going to talk about today is from our partners at the Financial Times. Mark Filipino, let him explain it to us.
Yesterday, a group of Apple employees began circulating an internal petition demanding location-flexible work. The petition is pushing back against Apple's call for workers to return to the office next month. Apple CEO Tim Cook recently told employees in and around the Cupertino headquarters they had to return to the office 3 days a week starting September 5th. Cook wants to preserve the, quote, in-person collaboration that is so essential to Apple's culture. The employees behind the petition argue they've shown during the pandemic they can produce, quote, exceptional work remotely. They want Apple to allow them to work with their immediate managers to decide on working arrangements.
Okay. Give me your thoughts on that one. Stu, starting with you.
Well, I think you spoke about vested interest, Alec. It's in the interest of the manager to have everyone in an office. And one can understand the value in certain face-to-face contact, but there's a job that's needed to be kept. And I think it's a big challenge a lot of businesses facing. I mean, you saw Nedbank, I think they've shed, 15 to 20% of their workforce since 2015, and I think it's moving towards that. But yeah, I think it's vested. Someone's job's at stake, so I can see why the employees kick back.
It also makes me think of, Nads, it makes me think of Elon Musk's similar reaction for Tesla employees, where he said, well, if you don't come back, assume that you no longer are employed here. And it's quite an interesting dichotomy between the workforce, especially the workforce that is getting younger and younger with Gen Zs, where the approach to work is very different and what they're willing to put into their time, not only in the office, but there is an absolute demand for global agnosticism. We're trying it at BizNews, remote work. We know that it can work, and that's the Apple employees' argument. We've produced excellent results. You can't force us into the office, and now we're signing petitions. And it's going to be very interesting to see both on that front, but also in South Africa, who wins. Is it the employee or is it the employer getting people, with their bums into seats, paying for effectively massive overheads, running these huge brick and mortar operations? Sorry, Nads.
I don't think that it actually serves either the employer or employee to win a war. I don't think there's a one-size-fits-all situation here. I think it's a circumstance, one of most likely many, that we're going to have to become accustomed to the fact that we need to adjust to a brand new reality, which is the aftermath of COVID. So I do wonder whether this blanket mandate of everyone having to be in the office for the reason of cultural cooperation and beneficence isn't perhaps, though, partly used to disguise what is an insecurity as to a company's ability to measure performance and productivity when employees aren't in the office. Because it's human nature, people take chances. So, there are those that can prove that their productivity has in fact shot up during the pandemic. But it's difficult to balance this. I think it comes down to the fact that there's just no one size fits all in this situation.
What an interesting topic for discussion. Thanks, guys. Lovely getting the briefing a little differently. Before we go, just bring you up to date with the markets. I know it is late on, or rather early evening, South African time on Monday. But it is not good news coming from the United States, with both the S&P and the NASDAQ down quite sharply. And as a consequence of that, our BizNews portfolio tomorrow is going to look a little, not as healthy as it looked last week. But it is an interesting time in the markets, and you have to look at it over an extended period. We've had a smashing of tech stocks or exponential stocks, then a rebound since mid-June. Now it seems as though things are coming back to earth again. What can we look forward to in tomorrow's show, Lucy?
Well, we'll certainly be unpacking feedback from the webinar that we have looking at the BizNews portfolio, as well as Sasol's shares with Fleetwood Grobler. But I think for now, that's all from the briefing for today. And if you enjoyed this episode, follow BizNews Radio now on your podcast platform to make sure that you don't miss tomorrow's show. Bye for now.